Monday, May 18th, 2015, S&P 500 made a new all-time high today. But what I'm looking at right now and what you're seeing on my screen is the Nasdaq Composite Index. I am a tech-heavy trader. All the names I focus on and trade are Nasdaq holdings. So I put a lot of focus on the Nasdaq, and I also just think the Nasdaq is kind of the leader of the market. If you were to look at the bull market off of the 2009 lows, you will see that the Nasdaq is up a greater amount than any other index out there. So I think, that kind of speaks to the leadership role that it has. A couple weeks ago, maybe even just last week, we talked about Nasdaq 5000 as being a key psychological level, and how we had 4 attempts above 5,000, and each attempt had seen the Nasdaq get rejected. But what happened last week, or the last 2 weeks I should say, is we put in a higher low versus the March and early April lows. So if you call this right here, this little U shape right there that I just drew, that was the first back away from 5,000. That took us down to about 4,800. You look at number 3 and number 4 though, those moves down took us to about 4,900. All right, and we found some support. So that was the first signal that the Nasdaq was maybe getting ready to break out. And then last week we put in a nice doji when you tried to back away from 5,000, but the price action, instead of going hard to the downside, this was May 12th, you put in a low at 49.31, so you got down towards 4,900, but you closed 49.76. We closed 1% off the lows on May 12th. That was a really nice day, and then 2 days later you were right back above 5,000. So bottom line, I like what the Nasdaq is doing with this 5,000 mark. It spent a good amount of time congesting around it, as you might expect, because 5,000, just a psychological level. These are new all-time highs in the Nasdaq, but now it's starting to assert itself, and we have a nice clean broke out to multiple week highs here today, and registered, I believe, the second highest close in the Nasdaq all time. So really simple setup on the Nasdaq here that I'm watching moving forward. 5,000 was such a pesky resistance level on the Nasdaq, where now, you guys probably know what I'm going to say, I want to see it be solid support. Alright, so I got a green line dashed here at 5,000. Stay above 5,000, and my bias ultimately remains higher on the Nasdaq. I think you can now start buying dips for sure, as long as we stay above 5,000. It's been a buy the dip market for a few years. These last 2 months got a little iffy, but ultimately buy the dip still prevailed. So stay above 5,000. And I think your core Nasdaq holdings, your Apples, your Googles, your Amazons, they will be trending higher for the most part. So let's talk about one of those big Nasdaq holdings, Nasdaq components rather, and that is Apple. And Nasdaq had a good day today. Apple had a really good day today. Not a coincidence. Remember, stocks make a market. Markets do not make stocks. So when Apple's moving 1%, that's adding a lot of weight to the Nasdaq. Nice breakout in Apple today, getting above this 130 mark. Very, very similar action in Apple over the last 2 months that you've had with the Nasdaq at 5,000. You think about Nasdaq 5,000, well, that's basically been Apple 130. This pink line is in line with 130. 130, we've tried to come above it a couple times, similar to Nasdaq 5,000, but every time got rejected, ultimately fell back beneath it. But again, last 2 weeks you started to put in a higher low versus those early March and April lows, so that was your signal that maybe she's getting ready for upside, and now we came above 130 today on Apple. So I like the Apple setup because I think it's nice and simple. Any ability now to stay established around 130, okay, and you're going to go higher, and I'm looking for a test on these all-time highs near 133 to 135. 133 being the first high from back in middle of February. 135 being the most recent all-time high off of that earnings gap up that she actually sold off on. So Apple, nice clean setup relative to 130 in my opinion. Get below 130 and look for downside back down, towards the channel of the last couple of months. But as far as Apple really selling off, not really a possibility until you get commitment beneath 125. That's been a pretty good floor the last couple of months. So get below 125, we can talk about a reversal. If that's happening, I guarantee you the Nasdaq is below 5,000 again, and there's probably some greater troubles going on in the market. Want to also talk about Apple's 3-minute chart today, just to kind of illustrate what type of move this thing made, because it was right out of the gate that Apple gave a good move to the upside. You opened 128.40s, and within the first 15 minutes of the day, you ran up to 129.40s. And when I saw that action this morning, not just in Apple, but it was happening in Netflix, it was happening in Tesla, it was happening in Priceline, happened in a number of names where you made moves right out of the gate at the open. And we know now that it ended up with new all-time highs for the S&P 500. But my takeaway is that things started to pick up the opening 15 minutes when they've been rather slow overall recently. You can consider the opening 15 minutes. If we just go back in time and use Apple as an example, our opening action on Friday, for instance, you opened 129.20s. 15 minutes later, you were right around 129. All right, so just not a ton of speed, a ton of commitment first 15 minutes of the day on Friday. You go back to Thursday, and you can see, again, here you had a gap up. You opened around 127.50s. And right around 10 o'clock, you were still around 127.50s. Granted, you made a move, after 10 o'clock, but I'm talking about the first 15 minutes of the day, that opening move. You look at now Wednesday, you had a nice move to the upside, ended up giving it up and going flat. Tuesday, you opened around 125.60s. 15 minutes later, you were hanging out 125.20s-ish or so. Not that great of a big time move. Whereas again, just to refresh your memory here, today you were able to move $1 within the first 15-20 minutes of the day. That's a big move for a stock like Apple. And my takeaway is that up until today, I've really been waiting the first 15-20 minutes of the day before entering the majority of my trades. If I look at my orders from last week, for instance, there was only one day when I entered a trade within the first 5 minutes of the day. But today, what did I do? My first trade was executed at 9:33, 3 minutes into the day. And it's because I saw movement happening quicker. So the adjustment you want to consider making, if you're comfortable, is you want to start executing quickly within those first 5-10 minutes of the day, because the market showed us some activity today. It showed us that there is going to be some legit movement going on within those first 15-20 minutes, whereas last week and in previous weeks it was kind of like, well, I don't really want to trade the first 5-10 minutes of the day because I'm not really confident that there's going to be a lot of movement, and I don't want to get caught holding a position that isn't going anywhere. I want to wait for clarity, I want to wait for certainty. So I was a lot more patient with my approach and actually trading less. But given what I saw today, I feel like maybe it's time to start being more aggressive again. Just throwing that out there as an idea for those of you that, like me, you focus on those real short-term moves and trying to catch some good movement off of the open. All right, so from Apple looking good, Nasdaq looking good, to a stock that to me still looks pretty awful, and that is Twitter. Twitter still just can't get out of her own way. And if you look at it, we're more or less still within the range of the big drop from the earnings leak debacle and all that stuff. If we just zoom in here and focus on this, right? So if you just put a trend line, or a horizontal line rather, you can see what I'm looking at here and why I'm thinking that this thing might be setting up to go even lower yet still. So big drop on earnings, we all know that, but you see this low here right around 38 bucks. All right, that was the earnings leak, but look what started to happen here, guys. We are starting to consolidate at the lows beneath this low. So anybody who came in on this day, really these 2 days, which just so happen to be the two highest volume days, anybody that came in on those days theoretically is sitting at losses. Now they could have averaged down, but again, just when I look at this chart, I see a lot of trapped money. All right, and it is not going to be good if we start drifting away from this even further. So I've got a close eye on Twitter. I think she can flush out even more. I think I'm going to zoom out here. I think we can go down to these lows here from late last year, early part of this year, between 36 and 34 bucks, because it just seems like until you can start getting established back above this horizontal line, which is again in line with about 38 bucks, then she is going to go lower. It's just a matter of time. It's like everybody who's been waiting on Apple to break out and it finally started to happen. I think you look at Twitter, I think people are looking at this thing and they think it's oversold. They think it's got to bounce. You've got some icon rumors. You've got some CEO being replaced rumors. But hey, if those rumors don't turn into something legit, this thing's in even more trouble and you're going to have some issues, because the market has been incredibly strong. Technology's been strong. Facebook's been strong. Twitter doesn't have an excuse for why it's down here, and the only thing I can think is that she wants to go lower. So simple setup on Twitter to me. If you see this thing continuing to stay beneath 38 bucks, then I'm looking for that flush out day. Maybe even it happens this week. The one risk I do think is there's a lot of headline risk on Twitter. You know, there could be a major catalyst announced overnight that could cause a gap and go into stock. So this is only something that me personally I'll be looking at for intraday trades. I will not be holding any positions, even though I'm short biased. I'm not going to go out and sit on puts. I'm only comfortable doing it intraday, as I think if it does end up flushing out, you're going to see a nice 3, 4, 5% down day and take this thing towards 35 bucks. So Twitter is my favorite short in the market right now, but again, that is an intraday short due to, you know, the risks that come with holding positions overnight, which I just have never really liked. I want to look at Priceline, because Priceline had an earnings related drop as well. I want to zoom in on this action here. So Priceline, here was the earnings drop. You had a gap down, right? But unlike Twitter, which is consolidating beneath its earnings day low, you look at Priceline. Priceline was able to find support around its earnings day low, right? You recall on Twitter I extended the horizontal line out from that spike low, or whatever you want to call it, earnings day low, and mentioned that we're now seeing the stock consolidate beneath that low. Well, Priceline's just the opposite. We saw some consolidation at that low. It held on to it as support, and now after today we had a nice bounce above it, and Priceline looks pretty good all of a sudden. And I kind of favor the long side of the trade on Priceline now versus 1,200 bucks. I think 1,200 bucks is a nice round level that you can focus on. And as far as breaking out, if you can get above 1,225, which is the high of the gap down, the base of the gap down, if you will, I think you could see a nice rally right back up towards 1250s. This stock is not far from 6-month highs, guys, so it's still a little bit of ways off of all-time highs. You know, the all-time highs, you got to go back to last year, up around 1350, I believe, from last April. So last February, 1350. But you look at it here, and your 6-month high is around 1280. You get above this 1225, I think you could see a very quick move up towards 1280. But the key, first things first, is holding 1200 now. Otherwise, if you can't hold 1200, then this low around 1180 will be in focus. Again, that earnings day low where you see this horizontal line drawn, and beneath that, then we could really sell off back down towards 1100. But I favor upside on Priceline. I feel like, unlike Twitter, which couldn't bounce at all and is starting to drift lower, Priceline bounced, and I think it did that for a reason. There's some good support here, and I won't be surprised if you see this thing start to rally from this point forward. Again, going back, one strong stock, one weak stock. Here we go, looking at GMCR, Green Mountain Coffee Roasters. This name has gotten killed all year. It's gotten killed since November of last year when it was making new all-time highs. And you can see this daily chart is just dropping on very high volume. And she's another one that kind of looks like she's in trouble. You had this high volume gap down at the beginning of the month that took it below 100, but then it was able to recover above 100. So if we would have talked about GMCR, last week after this right here, I would have said, oh, okay, well, she broke below 100, but she recovered off of it, and now as long as you stay above 95, she can actually have a bottom in place. Well, too bad, because she ended up gapping down beneath that low. And then, instead of bouncing like it did on the gap down below 100, she had another downside day today where she just got killed as well. So GMCR, definite downtrend. She needs some type of catalyst to break this thing back to the upside, because the technicals on their own look very, very bad, and looks like it is a short on bounces now from here versus that $100 area. I do think you're oversold. However, oversold can remain oversold for a while. Bottom line to me, I think a good short setup would be if you could come up, maybe bounce up towards 100, and then look to fade that back down towards 90 bucks. Perhaps you just break straight beneath 90 and you keep selling off here, in which case I want to reference a weekly chart to show you that this isn't the first time. Actually, I want to pull up a monthly. This isn't the first time GMCR has had a big drop after a big rise. You can see it back in like 2010. Yeah, see? So 2009, this was a darling stock. It was like $5. I remember my mom being like, maybe I should buy some Green Mountain Coffee Roasters. And I was like, yeah, Mom, do it. But she never did. Anyways, so stock went from like $20 to $120, right? And then you went from 110, 120 all the way back down to 20. People say pump and dumps don't happen on Wall Street, huh? And then you went all the way from 20 right back to a new all-time high at 150. So just insane, but I shouldn't say it's insane because it's happened before. So just trying to put this in perspective. Yeah, it looks really, really bad on the daily, but you look at this monthly chart and you're saying, okay, well, you went from $20 to 150. You were probably due to have some type of big drop, given that it had happened before. And now you're actually kind of approaching the 2014 lows. So I never will say try and catch the falling knife, but you do have a little area here around $90, where if you could hold 90-ish, which again, that's just about the April and May lows from 2014. If you can hold 90-ish or high 80s, you could set up for a bounce here and go back towards 100, where then, like I mentioned, the daily setup on the short side would be a fade versus that $100 level. So I'm not saying that I think it's due to bounce, but I'm saying I wouldn't be surprised if it did. I'm sure the sentiment is very, very negative here. A lot of people probably looking for more fade action, but guess what? This thing's dropped 30% in just a few weeks, and it's dropped 40, 50% over a longer time frame than that. Well, I guess not quite 50%, but let's see. High 155, low here $90. So what's that exactly? 41%, 42% or so. All right, so watch $90. If you can hold it, won't be surprised by a bounce, but ultimately short bias versus 100. another name that has some overnight headline risk to it, similar to Twitter. All right, switching it up, talking about a couple small cap stocks, starting with PTBI, biotech stock, I don't know for sure, that caught fire a couple weeks ago. Obviously, the move that it made speaks for itself. Went from $3 to $11 on really high volume and had a big time gap. Did some gap filling, very volatile, up, down, but then today recovered nicely after Friday's doji, and this thing could still have legs. So the first thing is, I don't trade stocks, but if I did, and if I traded low price stocks, PTBI is where I would look, because it has what you want to see, and that is wide daily ranges. You look at this thing, you have traded in a very wide range multiple days over the last couple of weeks, basically every single day other than Friday the 15th and Wednesday the 13th, which were kind of tight range days. But even those days, you still had nearly 10% of range to the stock. So, but you look today, your low $8, your high $9.50. That is some awesome trading range to play with. So PTBI is an active name, which to me is the most important thing when you're trying to trade on an intraday basis. You need activity. As long as you have activity, if you're good enough, you'll be able to figure it out. So looking at a 15-minute chart here to kind of break things down, you've got resistance in this $9 range, 950-ish range. You could see that is from last Thursday. These highs up here, you actually had a gap up on that day, but then you sold off all the way down to the 750 range, kind of put in a nice channel bottom. And then today you had a nice gap higher, tried to fill the gap, but held the first low from the first 15-20 minutes of the day, and then a really nice run in the afternoon. Really nice move in the afternoon to the upside here. So what I want to see now, if I was trading PTBI, is I want to stay firmly established above today's morning highs. Today's morning highs were around 860. Ideally, you won't even come down there. Ideally, you'll just hold $9, but that's not a must. It would just be nice if it happened. The must to me is staying above this 860 to 880 range. As long as you have support in that range, PTBI looks pretty good to me to continue higher, with the focus being on the psychological $10 level, which we crossed on May 12th, and pre-market high is $10.41. So $10, call it $10.50, guys. That's your breakout point. Actually, your pre-market high is $10.65 from May 7th. I'll still say $10.50 because that was the first time coming up to $10.50. If you can get above it again a second time, then I think you see a bigger move. Who knows the real story with this name? All I know is volume's huge, and you have no volume from back here. I mean, you look, your highest volume day, July 21st, 2014, you traded 20,000 shares. So I don't really care about that. All right, so I just care about, can you stay above, can you stay in the high $8 range? Talked about 868, 80, and challenge $10 to $10.50. And then if you can get above that, she should look pretty clean to the upside. As for downside, no reason to give up today's move. If you give up today's move, look out. She's in trouble. Something ain't right. And I would look for a test back down towards the $6 on down towards $5 range. PTBI, very volatile stock, has gapped up. Trade it how you want it, but it's another one that, given the intraday range, which has been awesome, I don't see any reason to take risks overnight when there's plenty of movement happening during the day. PTBI, very volatile. AMCN, $5 stock. I like this stock because it's actually got a trend to it. You know, it blew up last month, high volume, kind of had a little consolidation around $4 to $4.50, and then late last week broke above it, tested the high, and then today a nice clean breakout to the upside on AMCN, testing $5.50. And the simple setup that I want to see now is just relative to $5. As long as you stay above $5, which was resistance, I think AMCN looks good. I think you can buy dips. Below $5, I look for downside back towards $4 as you would be falling back into the channel. But it's another one that prior to this, there's just not a ton of volume, more volume than PTBI had. But still, you look, your highest volume day previous to this was 1.2 million shares, just about 2 million shares. And your average volume right now is 2 million shares, 1.6 million, coming up on 2 million. All right, but she looks good. She is at multiple month highs. Looks like maybe even multiple year highs. Yeah, so AMCN looks pretty good. Keep your eye on it for sure. I like the look to it. And it, similar to PTBI, not as volatile, but the daily ranges are great. You look at today, your low is 510, your high 560. You look at Friday, your low 480, your high 516. Thursday, your low 450, your high 515. On average, you're getting 8 to 11, 12% worth of daily range to work with. That should be more than enough to make some decent trades. So simple setup relative to $5. She's a trender. She's got momentum. Wouldn't be surprised if you see this printing sixes by the end of the week. Those were the stocks that I had notes on to go over for you guys. I want to have just a short discussion on the SPY and ES futures. But first, are there any other stocks that you guys have questions on? A couple others for me personally. Netflix I follow, but she's just so strong. Not a ton to say. Google, she's sideways. Not a lot to say there. Amazon's kind of sideways. Tesla testing key 250 level. Didn't feel like some of those names needed as much explanations as these ones did. Alright, not seeing any questions. So I want to look at the SPY before looking at ES futures. Because something that got brought to my attention multiple times today, and it's gotten brought to my attention multiple times over the last years. It seems like once or twice a year I have this discussion with a buddy. And that is the fact that the SPY continues to go up on low volume. And shouldn't that be a problem? My short answer is no. All right, my short answer is no. And I want you guys to think about this logically. If you own an asset and it is rising in price, how anxious are you to sell that asset? If you own an asset and it is rising in price, how anxious are you to sell that asset? Think about that answer. Now I'll pose a different question. If you own an asset and it is falling in price, how anxious are you to sell that asset? If you own an asset and it's falling in price, how anxious are you to sell that asset? If you're anybody like, if you're similar to me, when prices are rising for the stuff you own, whether it's your house, your currencies, your stocks, your bonds, whatever, your car, even though that doesn't happen, you're not too anxious to sell it. Because why would I sell it? If it's going to keep going higher, let's see how much more I can get out of it. But when they start to fall, you get nervous, you get a lot more anxious. And that's when you think about selling. So it's simple, but you say it, and then you see it happening on charts, and everybody gets concerned. But you look at the SPY, and you have this exact phenomenon play out all the time. Take the October low, for instance. Look at our volume. Highest volume over the last 6 months was at the October low. All right. You look at the December shakeout. Look at our volume. Highest volume over the last 5 months was in December. You look at these shakeouts, just 1, 2, 3, a sloppy 3. High volume, high volume, high volume. You look at the March shakeouts. I'm just making notes. 4, 5. High volume. Right? Higher volume. You look at this shakeout here, number 6. High volume. You look at the shakeout number 7. High volume. right? Because when prices go down, people get more anxious to sell, so there's more liquidity, more volume comes out. And you look at the moves to the upside, which I'll color with green, people get nervous, all right? Because you look at this period here, for instance. Look at this sick rally, right, off the October low. Let's call this number 1, all right? Let's say that this is late November. Look at our volume. Our volume is so low compared to the volume we went down on, all right? You look again at this move here, number 2, late December. Volume is super low. You look up here, number 3, new all-time highs in the middle of February. Volume is so much lower than it was when we were going down. You look at the grind higher here now, number 4, again, new all-time highs. Volume is low. Guys, this is just business as usual. There's nothing to worry about in my eyes. What I would be concerned on is if we start dropping on low volume, because that would be a change in the trend of the last couple of years. But if you look at this chart and you look, and we'll do it here for a second, I'm not going to spend a ton of time on it because hopefully it's clear enough just by that first example with all those different shakeouts shown. You look at this weekly chart though, and if we just draw some vertical lines to in line with the shakeouts, all right, on the weekly chart, and you can see since 2012, and if I went back even more, I'd be able to show you a lot more of them. Anytime we go down, there's a ton of high volume. It's just the way it happens. It's just the way it works out. And when you go up, we get low volume, right? So is everybody seeing this with these vertical lines that I have plotted? These are all plotted at high volume down moves. You can see the April 2012 shakeout, the October 2012 shakeout, little bump lower in April and June 2013. The beginning of 2014 we had a big shakeout, went from like 1850s down to 1700s on the S&P. That spring we had a shakeout, and then of course the October lows, we talked about those on the SPY chart, and now the shakeout at the beginning of this year, all coming on high volume. I mean, look at the volume that lines up with this stuff. It's hard to see maybe because of these vertical lines, but you can see that the red volume bars are consistently higher than what are blue volume bars on my platform here. So I personally think that the low volume stuff is just kind of much ado about nothing. It's weird because if you kind of read the same stuff I read when you first start learning about trading, what do they say? There has to be volume to trust a move, right? That volume must confirm the move or whatever. You know, that you shouldn't buy something that's going up on low volume, that something's wrong when that's happening. Well, time and time again, whether you're looking at an index or you're looking at a stock, you go down on low volume and you go up on high volume. That is just the way it works. Let me show you what happens when you wait on volume to show up. You miss moves like Netflix. Look at Netflix, right? Huge tank on huge volume. Highest volume of the year in 2014 came on a gigantic gap down. Well, guess what? That ended up being the best time to buy Netflix, probably the last best time to buy Netflix that you might ever see again. All right, and then of course now we've gone up on high volume. But even you look at the down moves on Netflix within the gap, you look at this period right here before this most recent gap, which was just ridiculous, and you can see high volume here in middle of March during that down move. So don't be scared away by volume. Not until we start seeing the volume pattern change will the volume become a concern to me. So I know that's a long-winded answer, but I think it's important to show those different examples because they're very useful. So lastly now, just quick review on the ES futures. Oops. So you're looking at ES futures here. I'm going to go to a 60-minute chart. as we had a nice establishment above 2100 finally in the futures. I talked about Nasdaq 5000 at the outset. Well, could have been saying the same thing with futures, ES futures 2100. ES represents the S&P 500 contracts. All right, so had a real struggle with 2100 over the last few weeks, couple of months on S&P futures, but last week got firmly above 2100, tried to come back down to it on Thursday, and then last night when the futures market opened, did a good job holding, putting in a higher low above 2110, and then nice rip to the upside here, testing 2125s, making new all-time highs. So I'm not a futures trader, but I do watch them close. I'm watching 2125 right here. That is just a quarter mark psychologically above 2100, and then 2121 is just your 1% extension mark above 2100. So call it 2120 to 2125. That's the key range on the S&P futures to me in the immediate term. As long as you're above 2120, I see immediate term momentum being firmly to the upside. Below 2120, and I would look for a back test back down on 2110 to 2100. No reason to give this move up and go below 2100 on futures. If that were to happen, I'd be concerned. I'd think that the market is rolling over a little bit and setting up for a pullback. So simple setup, as long as you stay above 2100, I'm pretty firmly bullish. Alright guys, that's all I have for you. Any questions on anything? Alright guys, not seeing any questions. So good stuff. I'll see everybody in the chat room tomorrow. Let's have a good week. Thanks.